Hello and welcome to today's presentation. Today we're going to look at how to quickly find smoking hot stocks that are ready to trade in under 20 minutes per day. So my goals for today are to show you a system, a methodology that shows you how to find stocks and to do that in under 20 minutes per day. And then third and finally, if you need more information on how to trade those stocks, then I'll show you where you can get more information. Before that though, I talk fast and funny, so that means that you need to listen hard and think faster. I'd also like you to stay to the end because we're going to go through a step-by-step system and you're only going to get the most out of the presentation unless you stay to the end and watch the entire presentation. So if you could do that for me please, and turn off all the distractions that you have. We're also different. We practice what we preach, and we have been doing this for a long time. Personally, I've been doing this for more than 20 years. I've personally coached and mentored around 30,000 people in that time. Personally mentored more than 1,200 people, which doesn't sound that much until you consider that it was on a one-on-one basis. So we've helped with a lot of success. I've ghostwritten for several authors, managed my own hedge fund. I've consulted with Saxo City, Direct FX, GFT, Halifax FX, Jack Swagger, Chuck Dukas. I can name drop with the best of them, but none of that really matters. I've just been doing this a little bit longer than some other people. I've also learned this the hard way over the last 20 years, and I learned all of this primarily through trial and error, what works and what doesn't work, pretty much by making every mistake that could be making. I've done a lot of things wrong as a result, and again, what a lot of people perhaps don't know about me is that I was forced to go into trading full-time back in 2002, 2003. I was doing this trading thing part-time prior to that, but full-time I've been doing it since around 2002, 2003. When I say full-time, actually, I may actually been doing it for myself, trading my own accounts and my own money. I've been trading it a short while before that as well. I was actually diagnosed with Crohn's disease way back then. And then for the next couple of years after I was in recovery, I was pretty much housebound for 2 to 3 years. So, I couldn't get a job. I couldn't go back doing whatever I was doing. I had to earn an income from the internet, and the skill set that I had was pretty much at the time how to trade. I had to make it work, and I had to make it work fast. So as a result, I have made a lot of the mistakes that each and every one of you has made. I think what separates me though is I learned fast from those mistakes and I didn't want to repeat them. And because of that, I've done a lot of things right. And I've discovered my particular process the hard way, one piece at a time. But the good news is that you get to cheat and learn what the easy way is. So the hard way, sitting at the desk for hours at a time, trying to glean some insight of information of what the next best trading opportunity is going to be at that moment, for the day, the week, the month, or even just in the next couple of minutes. Before doing it on my own and trading my own account, one of my first my only trading job as it was with a software company. We were trading their accounts. It was their software system that they were selling, and we had our own accounts as well. The owner would basically come in every time there was like a little signal would just bing up, and bear in mind this is his software, it's his baby. He devised this black box system that fired off signals. We were just glorified button pushers really. But the owner would come in every time and override every decision that we made, to the point where we just sat there every day looking at the markets. And I would imagine that you've done things similar where you're not sure what to do, whether there's a signal, it's a good signal, it's a bad signal, whether you're looking at the right thing, the wrong thing. You pretty much just end up sitting at the desk and ultimately flicking through chart after chart after chart after chart, wondering if the next one that you look at is going to be the one, whether it's the right time to trade. And ultimately after a period of time you can develop health issues. I've had my fair share of them, pretty much by sitting at the desk hunched over looking at those charts. And if you've not got a good chair to sit on, then you will develop some type of lower back pain, but that's just the nature of, I suppose, any desk job. Constant frustration of wondering what to do, having no clear guidance over what you're doing, whether you're doing it right, whether you're doing it wrong. And this is pretty much the hard way of learning how to trade on your own without anyone to guide you, is to say, yes, you're doing the right thing, or no, don't do that. It's, you know, it's going to be horrible if you do that. There's no one there to tell you whether you are doing it right or you are doing it wrong. And that's pretty much the hard way. And most retail traders, you and me, end up doing it the hard way and having this constant frustration, and end up being in this cycle of being too late on trades, being too early on trades, not placing the trade, placing too many trades. There's no one to tell you what to do and what not to do. And that's the hard way. So do you want to continue doing it the hard way, or do you want to start doing it the easy way? Of course you do. So I'm going to show you how to quickly find smoking hot stocks that are ready to trade in under 20 minutes per day. Does that sound good? Perfect. So the 4-step process of the entire trading system is to find stocks in your universe. Not every stock is worth trading, and basically just filtering down the best of the best out of all the possible candidates. I end up with personally about 350 stocks that are worth looking at, that have good liquidity. And if you want to be super selective, there's around about 150 stocks. And if you wanted to be really selective, you could look at a smaller and smaller list. The point is that, again, not everything is worth trading. So you need to create your universe of the things that you do want to trade and the things that are worth trading. Next thing we want to consider is, of that universe, we need to find stocks to trade today. We use several filtering strategies to help quickly find what's worth trading now, because we don't want to be looking at chart after chart after chart. We just want to put our eyeballs on the thing that's ready to trade right now. So that's what that section does. When we found something that's worth trading, we want to put that trade on. We want to put the position on, right? It's important. So we want to know the best way to put the trade on and how to get the most out of the opportunity that's presented for us. Again, I've got several high probability strategies that help us put the trade on to ensure profits and success. Finally, we've got managing the profits. Managing your portfolio is just as important, and like perfectly baked cakes, it can be spoiled if you take the cake out too soon or if you put the cake in for too long. So the management side is ensure that we get things just right. And like Goldilocks wanted, not too hot, not too cold, but we want it just right. And that's what we want to do with our portfolio. We want to make sure that things are just right and then whip our profit cake out the oven. Does that sound good? That's the full 4-step process. The thing that we're going to focus on today is finding stocks to trade. How to find those stocks to trade that are ready to trade today. So, got to mention this. We've got, I'm not an investment advisor anymore. Past performance is no guarantee of future performance. Results are not typical. I'm going to walk you through how I specifically look for hot stocks. It's how I show all my students. I do it in under 20 minutes per day. Some people might do it faster. Some people might do it slower. It's perfectly fine, whatever you choose. But what I'm going to do is I'm going to show you exactly how I do it. And this is what's working for me right now. Is that good? Perfect. So the 3 steps of finding smoking hot stocks. So grab a pen and paper, write this down. There's 3 steps to this. How many steps are there? There are, count them, 1, 2, 3. So 3, as always, is the magic number. So first one is we're going to find a statistical price extreme. Now the reason why I want to do that is this is probably the secret ingredient. This is what makes it doable in under 20 minutes, because we can replicate this and we can automate it in a very short space of time. Step 2 is we're going to find a logical stopping point. So we've got a statistical price extreme, then we want to make sure that we have a logical stopping point, because the chart, the stock that we're looking at, it needs to have stopped where it's at previously, because there's a good chance that it's probably going to stop again. That makes sense, doesn't it? And then the third and final thing is we want to make sure that it's ready to change direction. we want to make sure that we've got this sign of a price exhaustion. So that means that it's ready to trade today. So we've got these 3-step processes. We want to find stocks that are looking good. We want to find stocks that are about to stop. And then we want to find stocks that are about to turn, that are trade today. So it's kind of like a ready, aim, fire type of process. It's quite simple. It's 3 steps: ready, aim, fire. So you want to find stocks that are ready. We aim, and then we fire. Ready, aim, fire. So pretty straightforward. So what does all that mean? Again, this is the 10,000 foot view. So let's go into this in a bit more detail. So price at a statistical price extreme. What does this mean? It could mean a lot of things to a lot of different people. But what we're going to do is we're going to look at something that is simple and replicatable. And that means that it can be done over and over and over again. And it's simple, which means it can be done quickly. So hopefully you have heard of Bollinger Bands. Now, the way that we look at these is quite unique. And again, if you've not heard of Bollinger Bands, we're just going to give you the quick overview right now. You don't need to know the complete ins and outs of Bollinger Bands and what they are and how to do them, because again, we use them with our own little twist. So that's what we'll explain to you as part of this process. So don't worry if you don't know how to calculate them. Software today does it all for you. But anyway, the quick overview, the quick reminder of Bollinger Bands is there's 3 lines to them. So you've got your usual stock chart, which you can see there, those red and blue candlestick bars. And then you've got an upper blue line, a lower red line, and then you've got that middle grey line. That middle grey line, that is a 20 period moving average. So what it does is it takes the 20 closing prices in this case, it adds them all up and divides by 20. And then it takes that figure and it runs it through the Bollinger Band calculation, and then it plots an upper and lower band. And that upper and lower band are at 2 standard deviations. So they're the upper and lower bands there, so that's what I'm talking about there. So the blue upper and the red lower bands are at 2 standard deviations. Again, we don't need to worry about what that is and how it's calculated at the moment. What the Bollinger Band does, I suppose it's a measure of volatility. It basically shows us how crazy or how calm the price movements have been in a set time period, in this case over the last 20 bars. Now, don't panic, folks. This is just a very quick overview, just so that we're all on the same page. We don't have to do this on every trade. Again, the software works this out for you. It's a tool that comes as standard on most platforms these days, but it's important for us to know. So we just need to be aware of what these things are. So Bollinger Bands, why are Bollinger Bands important? So fun fact for us is that 95% of data points are inside of the Bollinger Bands. What's that look like? The upper and lower bands, what we're saying is that these act like a statistical boundary. And because of the way that the calculation is, well, it's calculated, the majority of the data points, the closing price that the calculation references, is inside between the upper blue, or below the upper blue line, and above the lower red line. That means that 95% of all those data points are inside the band. That's what we mean by that. So fun fact number 2 is the inverse of that. That means that 5% of the data points are outside of the Bollinger Bands. I completely understand that this is not quite accurate. For those people who are aware of Bollinger Bands and what they are, there's a little bit of an inaccuracy in this, but this is, again, this is the 10,000 foot view, and it just allows us to have this very simple calculation. So before you finish rolling your eyes rather, just understand it just allows us to be automated with the process. We're going to add other bits to the mixing pot, as we mentioned earlier. So fun fact number 2, again, the inverse, it's 5% of data points are outside of the Bollinger Bands. So what does that look like? It allows us to have a statistical extreme. So according to the Bollinger Bands, 95% of the closing prices are inside. That's what we consider normal, because that's what happens the majority of the time. So 5% of the time we have this statistical price extreme, and you can just see there 1, 2, 3 circled areas where price has been outside of the Bollinger Band. When I say outside, the closing price has been outside of the Bollinger Band. You can see a few other instances where price has moved outside, but it's not necessarily closed outside. So we've got this statistical price extreme where price is closed outside the Bollinger Band 3 times. And these are the types of areas on the chart that we're looking for. This is what a statistical price extreme for me looks like. Does that make sense? Do you understand it? I'm sure that it's, visually it's quite clear. Statistical price extreme is when price closes outside of the Bollinger Band. And as you can see here, it doesn't happen that often. And that's what gives us a statistical price extreme. Does that make sense? So, how can we do, we don't want to look at every chart all of the time. So how do we do this fast? And more specifically, how can we look through 350, this is my stock list. How do we look through, at the moment, 345 stocks quickly in 2 clicks. I want to go click, click, and I want to find the stocks that are at that statistical price extreme. So we know what we're looking for. Now I'm going to show you how to look for that really quickly. Does that make sense? And this is so that we're not flicking through chart after chart after chart and we get rid of the screen time. I don't want to be spending any more time at the computer than I have to. I just want to go click, click. That's the stock I'm going to look at today. Make sense? Cool. So to explain this, we're going to look at a variation of the Bollinger Band tool. And that variation is the Bollinger percentage B, or percentage Bollinger or percentage B. It might be named slightly different things on your platform, but it's percentage B or the Bollinger percentage B. Again, it depends on your software programming, and this usually comes as standard for most platforms. And what it does is it shows where price is relative to the Bollinger Band on a scale of 0 to 100. So it calculates it as a percentage. So for example, if price was exactly in the middle of the upper and the lower Bollinger Band, it would read 50. It's at the 50% level. If it was from the low to the high, if it was 3/4 of the way up, if you like, from the lower to the upper band, then it would read 75%. If it was at the lower Bollinger, it would read 0. If it was at the upper Bollinger, it would read 100. Now what's interesting is that this indicator can show us a reading of greater than 100 or below 0. So if the reading is below 0, it's outside of the Bollinger Band. It might be a -5 or a -6 or a -7. Ultimately, it lets us know that it's below the lower band with a negative reading. And if it's above the upper band, it's going to give us a reading above 100, 105, 106, 107. That lets me know that the price is above the upper Bollinger. Does that make sense? This is what it looks like on the chart. What I want to do is I want to use that indicator in the table format because again, it's going to make it quick for us. So on my watch list, I'm going to insert the indicator, and you can see there in the red highlighted box that I've got some percentage figures. I've got 48%. That lets me know that it's almost exactly in the middle of the Bollinger, between the upper and lower. On the second line there, we've got Apple. It's reading 84%. It's almost at the upper band. 96% is the next one. Again, it's even higher. It's even further towards the upper Bollinger. So they get the idea there. Now, what I want to do is if I can sort that column just like a spreadsheet, click, click, job done. So those 345 stocks become, in this case, 8 stocks. In this particular example, we've got stocks now that are at a statistical price extreme. The closing price is below the lower Bollinger Band. So this might suggest that a bit of an upward movement could be expected. So on these particular stocks, I might be considered as being bullish. Now there's other steps to the process, but now those 345 stocks, I don't need to worry about all the others. I just need to worry about looking at 8 charts. So this means that I've now utilised the time I have at the desk more efficiently, more effectively, and I'm just looking at 8 charts that might be more interesting than the other 335, 36, 37. The others aren't important to me with this particular method. So, does that make sense? So step 1, find a statistical price extreme. And all I'm doing is going click, click, and I'm sorting my Bollinger percentage B button, the column, just so that all the stocks are ranked in their extreme, that the upper extreme and the lower extreme. In this case, we're just going to go through the lower extreme example. Does that make sense? So click, click, sort them, and in this case, 8 stocks appear. These are at a statistical price extreme. Awesome. So, if that's clear, let's move on to step number 2. So I've got those 8 stocks, and now I want to look at those 8 stocks, and I want to find out if any of those 8 stocks are at a logical stopping point. So do you know what this might mean? Very simply, yeah, you're right. It might mean that we're at support or resistance, supply and demand. Now, a little bit of a personal sidebar here. I prefer to call these levels of interest or logical stopping points. Now, it's a little bit of a quirky reason, but it's more to do with the psychology of trading. And the reason why I do this is I don't want a preconceived notion of support or resistance, because the textbooks have drilled it into us, and mentors and gurus and all the other charlatans, they've drilled it into us that if price is at support, we've automatically got to be a buyer, and it's not quite the full picture. If price is at support, I can buy support, but I can also sell the break of support, and that's the part that most people don't tell you, because if support and resistance always held, prices would never move. There would be no markets. So to have and avoid this preconceived notion of buying support and selling resistance, I want to ensure that I'm coming at this with an open mind, because it might be that price is at support and it's just gone through it slightly, in which case I might like to sell the break of support or buy the break of resistance. Anyway, just a quick sidebar. It's a little bit of a quirk of mine, but that's all I mean by a logical stopping point or a level of interest. It's just my way of saying support or resistance or supply and demand. But I'm trying to do it in a way that doesn't give me a preconceived notion of what to expect. Does that make sense? Cool. So step number 2, logical stopping points. All this means is, has price stopped here previously? That's it. How simple was that? Look left. So price is at a statistical price extreme, step number 1. Step number 2 is it at a logical stopping point? Look left across the chart over the last, if we're on a daily chart, over the last 6 months, 8 months, 12 months is usually how far I look back. Just look back over the last 12 months over on a daily chart, and has price stopped here previously? Yes or no? That's it, nice and simple. So those 8 stocks, 1, 2, 3, 4, 5, 6, 7, 8. Flick on that chart, look left, has it stopped here previously? Yes or no? If no, move on to the next chart. Next chart, has it stopped here previously? Look left across the chart, has it stopped here previously? Yes or no? If you're not sure, move on. We want a very clear, yes, it stopped here previously. Look left, has it stopped? Yeah, it has. So we want to make sure that we have a chart that's very clearly having stopped at that point where price is at right now. Has it stopped there previously? So statistical price extreme, that raises our awareness of the chart for a possible trading candidate. Further investigation when we look at the chart, Has it stopped there previously? Yes or no? If no, move on. If yes, go to step number 3. Is that easy? Does that make sense? Really straightforward. Don't stress over this, folks. At this point of the process, you don't need to look at the chart for anything more than 2 or 3 minutes. If you're more experienced, 10, 15 seconds. You don't need to spend all day and ahhing as to has it stopped here previously. If it has, you'll see it. If it hasn't or you're not sure, move on. Go and look at something else. Who cares? We've got hundreds of stocks to look at. We've got 8 of them on our example so far today. That's just the bullish opportunities that are at the lower Bollinger Band. And I'm assessing to see if it's at support. And then step number 3, is it ready to turn? So now what I'm looking at is, or looking for, is a sign of price exhaustion. So what I need to do here is assess what's going on. I just need to look back over the previous movements and see that it's moving down. So price is at a statistical price extreme. It's at a logical stopping point. And then I'm just going to check to see, all right, okay, the previous move was down. We can just see the last several bars were moving downwards. And now I want to see if we have a sign of exhaustion. Because if that previous move is over, there's a good chance we might just see a little bit of a retracement, a pullback, a kickback, a bounce, however you want to describe the thing. It doesn't matter. I don't care. I just want to know that it's going to potentially move high. And this, for me, is going to provide me with a high probability opportunity. So signs of price exhaustion for the people who are a little bit more technical and experienced, it might be that you're already aware of some of these things. It's hammers, it's dojis, it's shooting stars, it's piercing lines, dark cloud covers, engulfing bars. It doesn't matter if you know or you don't know what they are, because it just doesn't matter. What I'm going to do is bucket them all into one way of thinking, because we don't need to know the name of the thing. Knowing the name of the thing doesn't make us a brilliant trader. Knowing what to do with the thing makes us a brilliant trader. So the name of all those things, it doesn't matter. We're going to do it a new way. We're going to do it a smart way. Who wants the smart way? Who wants the new way? Of course we do. We don't need to know the name of everything in every idiosyncrasy of what these candlestick patterns are. Again, it's not necessary. So the new way and the smart way is just to recognize the opportunity that's in front of you. We just want to know, what does a price exhaustion look like? This is the quick way, this is the smart way. Quick overview, bar chart on the left, candlestick charts on the right. It's just a different way of interpreting the data. On the left, we've got the open, the high, the low, and the closing price for the day or the time segment that we're looking at. I'm often referring to the daily chart during this presentation. So it's the open for the day, the high for the day, the low for the day, and the close for the day. And that's the range of movements that prices opens, moved up, moved down, and it's closed throughout the trading day. And on the left there, you can see it's a bar chart, and that's the way that it's represented there. On the right, all we're doing is we're connecting the open and the close with a box. That's all a candlestick chart is. If the closing price is higher than the open, you can see that we've got that green candle. That just means it closed higher than it opened. On the extreme right, we've got the red candlestick. That just means that it closed lower than it opened. Does that make sense? That's it. That's the only difference. So candlestick charts, just a different way of viewing it. We've got bullish candles, we've got bearish candles. Now, what's important here is the wicks of the candle. The wick is that spike from the open to the low, or the close to the high. Basically, it's the bit above the green or the red box. Does that make sense? That's what I'm looking at. So when I refer to a wick or a spike, that's what I'm referring to. That's the body, if you like. The coloured boxes are the body, and it's the body to the high or the body to the low, and that's what I'm referring to as the wick. Is everyone still with me? Are you still with me? Cool. So a sign of a price exhaustion is where we see a big spike on the candle and a small body. Does that make sense? So what's gone on there is we've seen price basically put a reasonably big move in one direction. It might have done its average day's movement. It might have gone from the open down to the low, and it's done its range of movements that it normally does for the day. You know, maybe 1-2% of the stock price. It's put in its regular normal range of movements. But what's happened is it's done a 180-degree U-turn in the opposite direction. It's gone back to the open or even past the open for the day. And it's basically done this 180-degree U-turn. It's seen the momentum change from one direction to the other quite quickly, and in the time period, in this case the day that we're looking at. So a sign of price exhaustion is where we've got that small body and the large wick or the large spike on the candle. So step number 3 is, do we have a sign of price exhaustion? Yes or no? Is there a spike on the bar? Isn't there a spike on the bar? If you're not sure, guess what? Move on. Look for something else. You will know it when you see it. So is there a spike on the candle? Yes or no? So we've now got 3 things. Statistical price extreme, logical stopping point, and then we want to see if there's that sign of exhaustion. So 3 steps. Statistical price extreme, logical stopping point, sign of exhaustion. Does that make sense? You happy with that? Let's just recap. So we've got this click, sort our stock. Step number 1, find a statistical price extreme. Our big list of stocks comes down to, in this case, 8 stocks that we can trade. As the stocks are at the lower Bollinger Band, I'm thinking that we might have a bullish up move. Conversely, if price was at the upper Bollinger, I'd be thinking more of a bearish downward movement. So in this case, 8 stocks that meet a potential bullish opportunity. Next thing I'm going to do is look at those 8 stocks one at a time, look at the charts, and see if they're at a logical stopping point. So look left, look over the last sort of 12 months of the daily chart, or the equivalent on different time frames, and look left. Has the stock stopped here previously? 1, 2, 3 times it's stopped here in the past, so yes. Again, don't stress too much about this. We're not looking for an exact price level. I just want to look left. Has it stopped here previously? Yeah, you know, it's within $1. It's approximately stopped here in the past. That's sufficient for our purpose. Statistical price extreme backed up by a price stopping point, an actual stopping point, a potential level where the stock price could do something interesting. And then finally, we're looking for that sign of a price exhaustion. We can see that we've got that previous downward movement, and in this case we've also got a spike on the previous completed bar. Please ignore the live bar. We only deal with completed information, so the last completed bar that we're looking at. So we've got a logical stopping point. My apologies. We've got a statistical price extreme, a logical stopping point, and what we're looking at right now is a sign of exhaustion. This lets me know that not only has the previous downward movement stopped, it's also reversed, and it's reversing at a statistical price extreme and what most people might call support. In my book, I'm calling that a logical stopping point. And then the price activity for yesterday, the buying and selling pressure, has done this 180-degree U-turn to say, oh, actually, we were bearish, and now there's more buyers than sellers, so we're thinking that we're going to be bullish. And it's done that in such a short space of time. It's created this spike in the daily chart. That's what we're looking for. So do we have this sign of exhaustion? Has the previous move potentially exhausted? Yes or no? If no, move on. If yes, as in this case, that's perfect. That's exactly what we're looking for. So now what we've got is we put the trade on. Statistical price extreme, logical stopping points, sign of price exhaustion. In this case, I'm going to be bullish. I'm looking to buy at support with all the trimmings. I've got everything that I need. I've got my Goldilocks situation. Everything is just right, and there's no reason for me now to not put the trade on. Does that make sense? Is that clear? Awesome. So, how many stocks can you expect to find with this method? Well, the old way is, you know, one of my students was, this is actually the story that he told me, so this is coming from him. He was scanning 50 stocks at a time manually, and maybe finding 2 trades over, 2 to 3 hours. And that's what Thomas was that's what Thomas was doing, because he came to me one day and he basically said, Phil, I can't find any stocks. I said, well, what are you doing? And he hadn't quite grasped the Bollinger Band in the watch list. He was looking at the Bollinger Band actually on the chart every day and couldn't figure out why he was taking just as long as he did previously. So he was scanning through the charts one day at a time, but he wasn't doing it on the watch list and sorting the stocks first. So the old way is going through charts one at a time, and if you're a little bit slower and at doing it, or your time's restricted, you might get through 50, 60 stocks over a 2 to 3 hour period, and that's the old way. No one wants to do that, and you've just seen the new awesome way takes 10 to 20 minutes. Click, flick through 2 or 3 charts and find out which stocks are smoking hot and ready to trade today. That's the new way. So, if anything, I've given you 2.5 hours of your life back every day. 2.5 hours, maybe even the full day. Some of you might be doing this full time already, but I've given you 2 to 3 hours of your day back. That's priceless. You can do this after you finish watching this presentation right now. That's my gift to you. You've got this new awesome way to find opportunities right now. Not something that might be tradable tomorrow or next week or next month. This is a system that you can apply immediately after watching this presentation and go away and do it. It takes 10 to 20 minutes to go through multiple charts in a very short space of time. So how many stocks? If we take the same philosophy, maybe 2 to 3 trades per week, we can now do 2 to 3, or find 2 to 3 opportunities per day. Again, the old way, we maybe find 15 stocks per month versus 60 plus hot stocks that we know are ready to trade at that moment per month. Again, I'm just comparing the old way with the new way. Does that make sense? So 2 to 3 stocks per week versus 2 to 3 stocks per day. Vast difference. 15 stocks maybe per month, depending if you looked at the right chart at the right time, versus 60 plus hot stocks per month. Does that make sense? Do you think that you can find something profitable to trade? It's going to be pretty difficult not finding something that you like trading. That's awesome, isn't it? You've got to appreciate that that is an awesome system. I'm sure you'll also agree that this has been time well spent. We've had maybe 40 minutes together so far, and it has been time well spent. My goals have been achieved, and you've got exactly what you needed. I've shown you, at the beginning of this presentation, I said that I would show you how to find hot stocks. I would show you how to find them in under 20 minutes. And if you've got everything you need from this presentation to find hot stocks, get in touch. I'd love to hear from you and tell me about the success you're having with this system. I also said that I would show you where to get more help if you needed more help. The next logical thing that you might need help with is either another system of finding stocks. We've got several, as we mentioned earlier, or you might need help with how to put the trade on. That is the next logical thing. Now you've found the stocks, what do you need stocks to, or how do you put those stocks to trade? So with your permission, I'll go through the more detail that I promised you at the beginning of what to do next. How do you trade those hot stocks? We also went through the full 4-step process you'll remember at the beginning. How to trade, or how to find stocks and put them in your universe. We've covered today how to find stocks to trade. The next thing is how to trade those stocks, putting the position on and managing the portfolio. They're the 4 steps that we mentioned. So if you need more help, we deep dive into how to create your universe. What is the criteria that you need to create your own universe? There's more than 10,000 stocks on the US stock market. Not all of them are worth trading. For a variety of reasons, not all of them are worth trading. So we show you how to create your own stock list that is suitable to the things that you hold dear to you. Me personally, I want to make sure that there's plenty of liquidity on the stocks that I trade, and that's a big part of the requirement for the stocks that I want in my universe. We went through the 1,000-foot view of finding stock, how to find hot stocks to trade today. We went through one method using a statistical price extreme, in this case the Bollinger Band. We've got 4 other systems that help us to find stocks in an equally mechanical and automated way. So if you're not happy with a reversal type strategy, we can find something with a trending strategy. We can also look for explosive stock opportunities. So rather than look for a trade every day, you might want to trade less frequently and look for those stocks that are ready to explode. And they come around, a couple of times a month. I mean, they're not something that you trade every day. They're something that you trade a couple of times a month. So again, we've got several systems and methodologies to find stocks that suit your personality. As you mentioned before, once you've found those stocks, it's how to trade those stocks. We've got lots of high probability ways of putting the trade on, and we'll show you exactly how to do it so that your risk is minimal, your profit is maximized, and you've got the highest probability set up for your trade that suits your risk parameters and that is easy to manage. More specifically, you don't have to be monitoring the computer screen, looking at every penny uptick and downtick of the stocks that you place as they're moving. And then the final piece of the puzzle is managing the portfolio. As we mentioned earlier, we don't want to put the position on for too long. We don't want to take it off too soon. We want to have that Goldilocks experience where everything that we do is with a purpose, and that we do things that are just right and fit for the purpose that you want as a trader. So that's what we have. Baboab.com that's BABOAB.com. We've got a system that finds smoking hot stocks and shows you how to trade those smoking hot stocks every single day. So the package that we've put together for you, one of the benefits of doing group buys, which is, for everyone that's been on this webinar, that's what you get to do. You get to bring the price right down, because separately we actually sell everything. We sell everything, or sell everything separately rather. Part of the package deal that we put together is you get 4 additional hot stock screeners. We've got a total of 5. I've shown you one of those today. And at the very least, I've given you back 2.5 hours of your life by showing you the one stock screener system. And you can use that today, right now, after this presentation. We've got 4 others to show you. And just by the law of numbers says that, if you find more opportunity, then you should be more profitable, and you're finding 60 additional stocks to trade each and every month. Anyway, we've also got the 3 highest probability entry methods that I like to use, because there's different ways of entering different trades depending on what the requirement is for the opportunity. So we go through my 3 highest my favourites actually, 3 highest probability entry methods that we use that allow us to maximise our opportunities and maximise the results based on the stock screeners that we use. We'll show you how to value and price the trade or investments that you want to do, because again, the next thing after we've found the thing that we want to trade, the stock that we want to trade, we want to be able to value, is it a good value trade, is it a bad value trade? Because sometimes, and only sometimes, it becomes obvious that actually this isn't, while the chart says that it's a good thing to trade, then when we value it and we price that trade, the investment opportunity up, it might be that it's not a good price, it's not good value for money. So we show you how to do that very quickly, to figure out whether this trade opportunity is a good opportunity to trade. And we might actually not put the trade on because it's overpriced or it's underpriced, depending on whether we're buying or selling, and it's not good value for money. Part of the way that I trade is with options. So we'll introduce you in the options world. Very easy, very low risk, fixed risk. We'll do an options immersion and refresher course for those that have already experienced it. But we take you step by step through what options are, how to trade them, and how to put them together and package them up so that we have these high probability entry methods. Also, we do a charting immersion and refresher course just to kind of give you my spin on how to do some of the charting things that we do. Again, some of the other methods that we use require a little bit of additional charting experience, and we'll go through how to automate the process of doing the technical analysis side of things. And then we've got some additional bonuses. What I'll do to get you started in all of this is to give you my own triple filtered hot stock universe. So rather than you not have anything in your own universe, I'll give you mine so that you can get going and get started straight away and looking for these opportunities. Bonus number 2 is that you get me as your mentor in a box. That means that we get to interact each and every week, and we'll be on the phone talking and interacting, and you get to ask me questions. I get to help you with those questions, and that will be in a group environment and for a small number of you, depending on how fast. Bonus number 3 is limited, but we do get the one-on-one mentor. So for the first few people each and every month that sign up, you will get me personal one-on-one as your mentor, coaching you through your very own bespoke version of these strategies and methods. And what we'll do on these sessions is tailor these strategies to your very particular and specific needs and requirements, because again, not everyone wants to be trading all the time. It might be that you want a more passive approach because your work and lifestyle and commitments dictate that. It might be that you want to be a little bit more aggressive, a little bit more active. So again, we can attune the methods and the systems and the processes to suit your own personal circumstances and situation. And I actually charge, separately, I charge $26,970 to get you from start to finish in a one-on-one environment with all these elements that we've mentioned. I'll take you from effectively nothing to be competently placing trades in 6 weeks, and that's what I charge on that basis. And I charge that because it's worth it. If you imagine for a moment, I'm giving you, if we were working one-on-one, I'm giving you 6 weeks to 8 weeks of my life to get you fast-tracked from, if you knew nothing and didn't know how to trade, I would take you to complete competency in 6 to 8 weeks. So that's the value, because that's what it's worth. That makes sense, right? Now, Thomas, who I mentioned earlier, who's having some difficulty with finding the stocks. He was finding, going through 50 charts a day, maybe finding 2 or 3 trading opportunities a week. When we corrected his process and the finding stock method, this is what he sent to me. I was really made up, because Thomas went from struggling, a break-even, slight loss type of trader, and then when we introduced this process for him, he was finding hot stocks, every single day. He made you can see it right there, he made 3% in his first month testing, and then 20% in month 2. That's return on capital, not return on the capital used for the trade. So in his entire capital on his account, he's made 20% in month 2, and he's averaging right now, it was a good month actually, but he's averaging around 8 to 12% returns each and every month at the moment. This has been going on for about 8 to 12 months now, so he's doing really well. And this is quite a common thing. I mean, I'm hearing back various figures, 5% a month, 8% a month, 15% a month, Some people are in the mid-20s. But they're all coming back with, you know, 5, 8, 10, 11% returns each and every month. And that's quite a common thing to see. Well, it's obviously market dependent. Sometimes it's going to be more, sometimes it's going to be less. But generally speaking, that's what we're hearing. And, you know, these aren't isolated incidents. You know, these are the feedback that I get on a regular basis. We can see at the top left there, we'll break it down. The last 3 trades that are currently opened, it made nearly 10% on his balance. Again, we've got $125 in 2 days. First target is 142. I don't know if you can see the timestamp on this, but you know, later on in the day, he was waiting for that target to be reached, and he got his target reached there. So you know, in 2 days, $125 with very small position sizes. Again, this is just some of the feedback that we've received. I've got literally hundreds of emails and comments and, you know, nice words that have been said over the years. If you want to get in touch, I will gladly show you each and every one of those. But this is just a snapshot of the type of feedback that people have given me over the years. As I mentioned earlier, the benefit of group buys each and every month is that you get a discount. So I'm obviously not going to charge you $26,000 or just under $27,000 for a one-on-one session. The power of group buying means that you get that discounted as long as you understand that it is a group buy. So you can get started now for just $4,990 today. And what I'd like you to do is to click on the application process. I do not accept everyone. I want to make sure that you're serious about working together with me. If I'm going to give you a good chunk of my time, then I want to make sure that you're worthy of that time. So for $4,990, you can get access to what we're doing, but it's an application process. Now again, keep in mind, I'm nothing special. I've just been doing this a little bit longer, and I've learned this the hard way over 20 years, but I have discovered what works. So you're getting the benefits of my 20 years of trading and investment experience, and we're going to boil that down into a 6-week course so that you're competently putting and identifying trades on each and every day. So if all this did, the system, the strategy that we put in place, if all this did was finally make you and your trading profitable, would it be worth your time to learn how to do it? If all this did was find and trade hot stocks for you with this methodical step-by-step process, if all it did was to find new opportunity for you, would it be worth your time learning how to do it? Thomas certainly thought it was worth it, and he paid me a considerable sum of money to learn how to do it, and in a very short space of time is averaging 8 to 10% or 8 to 12% per month, and the majority of my students are averaging 8 to 10% each and every month. Again, some of them are more, some of them are less, but on average it's 8 to 10%. So you've got a choice, folks. You can either do or do not. There is no try. So it really is down to you. You can do it the slow way. You can do it through trial and error, like I did, and spend the next 20 years of your life trying to figure this stuff out, or you can do it the fast way. You can click the application and see where we go. How much is 10 years of your life worth? So it's a very small investment to fast track you on the road to success. And I'm sure you can see, you can easily see why people are paying me, you know, $20,000. I've had some institutional levels. I've done some work with Citigroup and Saxo, and they're paying me a lot of money to show them how to set this up and trade every single day with them on a one-on-one basis. So the group deals are really good value. It was a good deal at $24,000. It's a good deal at $10,000, but as I mentioned earlier, the power of group buying means that you can get your hands on this for $4,990 and click the application and see if we can work together. There are two main parts of the system. You can find hot stocks. We've been through the first part of it. So my guarantee is that when we go through the process together, If you can't find hot stocks to trade, what I'll do is you'll get one-on-one time. So although we're initially going to be in the group together, and that is guaranteed, if you can't do that, I'll spend the time with you one-on-one to make sure that it does happen. And similarly, if you're finding stocks to trade and you can't get the how to trade those hot stocks working, again, let me know. I'll personally walk you through it. We'll be in the group environment. You can ask it in the group environment. But if you still can't make it work, get in touch and we'll figure out where the problem is, what the thing that's holding you up is, because I'm completely invested in your success. I want to make sure that you can go away and apply the things that we talk about on a daily basis. You can find the hot stocks and have the success that Thomas and Philippe and Andrew and Sean and everyone else that has been through the process as finding hot stocks, that they're seeing the results and that you're seeing the same results as them. So that's my guarantee. The next guarantee I want to mention to you is that if you sign up today and if you don't like it for any reason, even if it's 29 days from now, let me know and I'll take care of you, because that's how awesome I am. So that's my 30-day guarantee. Get in touch. If you're not happy, we'll figure out what the problem is and basically I'll take care of you. Don't worry about a thing. So that's it, folks. All you need to do is fill out the application form and let's get started. So thank you very much for attending. That's me presenting at FX Street's headquarters. Click on the application form and we'll see if you're ready to work with me. Just a quick reminder, we're going to get the 4 additional hot stock screeners. We're going to get 3 high probability trading entry methods. Quick secret, there's actually 5, but there's definitely 3. I'm going to give you an additional 2 high probability strategies that are on top of that, because they're the systems that I've added since I did this slide. I've just remembered there's a little bit of a typo that I need to correct. There's now 5 high probability entry methods. Again, I always forget that part. We're going to show you how to buy those trades and priced investments. We're going to show you the options immersion and refresher course. We've got the charting immersion and refresher course. We've got the triple filtered hot stock universe, which you get so that you can kickstart and fast track yourself to success. You get your own mentor in a box, which is me. And for the lucky few, you're going to get bonus number 3 each and every month. The first couple of people that do take me up on this will get me as a mentor in a box one-on-one. So you can get started today for $4,990. Click the application and let's start the process today. What's going to happen, folks, is when you fill out the application, again, it's just below the video. You fill out the application, you'll be taken to a form. You just need to fill out the details. I just want to know that you're serious. That's really what it comes down to. I want to make sure that we're doing the right thing for the right person. So there's a few questions for you to answer. Just click submit, and then within the next 12 to 24 hours, what will happen is I'll be in touch. You'll get to speak to me on that point, and we'll just make sure that you're doing the right thing. We make sure that we're going to look after you. That's really what it comes down to, and we'll see if we can do some training and coaching together. And once that's done, and you're happy with it, and we've got all those final questions asked and answered, and we are doing the right thing for you and we're all going to go ahead, then we'll start our training and coaching. We'll figure out when the best time for you to trade is. So click the application process. Even if you're not sure, folks, you're not sure whether it is for you, there's no financial commitment right now. Click the application process. It might be that you've still got 1 or 2 questions. This is the great time to pick up the phone and get on in person with me and just ask those 1 or 2 questions that might still be niggling away at you. Fill out the application, ask those questions on the form. There should be a space for you to do that, and then we'll get on the phone and we'll get those answered for you straight away. Again, right now there's no commitments. Just fill out the application form, see if it's right for you, have a chat, we figure out what the right direction for you to move in is, and we take it from there. And then as long as you're happy, we'll figure out when the best time to start the actual training and coaching is. And assuming that it's going to be a yes and that we do work together and we do get some training done, then after that consultation call, it's going to be in the next 48 to 72 hours. That's when we'll start your actual coaching. Obviously, it depends on the schedule, but usually within 2 to 4 days after the application is filled, we'll start our coaching. And that's about it, folks. So fill out the application. We'll have a quick chat and then we'll start our coaching. And with that said, folks, thanks very much for your time. It's been a pleasure. I hope you've enjoyed it, the actionable content you can take today. And again, remember, fill out the application form and I'll speak to you in the next 12 to 24 hours.